Hello, everyone. Very warm welcome. Thank you for joining us from wherever part of the world you are. I'm so glad to see you all joining us today in this one of our global stage.
Bienvenue à tous. Donc, vous nous rejoignez.
We are very happy to see you all. So I see we have a massive quite a number of people joining us from different part of the world. I see people joining us from Colombia. We have a good number from Nigeria, DRC, UK, USA, Kenya, Tanzania, Uganda, everywhere. How lovely. It's going to be a very exciting, one of a very exciting session today. And with that, I think it'll be very great to see we put ourselves in the chat, introducing ourselves, to get to connect and to learn from each other. Please introduce yourself, at least your good names, institution that you're working with, and the country that you're joining us from. We'll be very happy to hear from you. And in that, I will start myself, introducing myself. My name is Brian Amaniteri, and I am working with Opportunity International Ed Finance as a community events and learning associate. And I'm joining you all the way from Dar es Salaam, Tanzania. So happy to see you. I can't wait to learn and connect with you all. So without wasting a lot of time, let me shift to the housekeeping announcement really quickly. All right, so in the few minutes, interpretation will be live. I think if it's not working at the moment. So we're going to have a live interpretation, especially for two languages, Spanish and French. So please feel free to switch to any language of your convenience. We'll post the instruction on the chat box so for you to follow and switch to the convenience language of your choice. And also, at the moment, please let's keep our mic muted, and we'll use the chat box much longer. So please use the chat box to send all your question or input. Or if you're getting any challenges, please chat in them, put them in the chat box, and then we'll help accordingly. But in a later time, when you want to go to contribute or to talk, then you'll just raise your hand, and then moderator will allow you to talk accordingly. But also, this session is being recorded just for learning purposes, and we'll get time to share it after the session is done. All right, after that, allow me to get to bring you to the proper warm welcome and opening note. And I know one person who could do this job much better. Ladies and gentlemen, allow me to bring on stage Jane Egg, who she's leading the department that I'm in. She is a Senior Director of Education Finance Products, and she's joining us from Kampala, Uganda. So Jane, please welcome on the stage.
Thank you very much, Brian. And indeed, it's an evening from Uganda and greetings. I would like to warmly welcome everybody who has joined us. I know that it's morning, for example, in Latin America and in the US. It's late evening in most of Asia, and in Africa, most places it's either afternoon or evening. So welcome. I would like to, on behalf of Opportunity Edu Finance, to thank each and every one of us from these different parts of the world who have spared time to join us to listen to our panelists today. We're especially pleased to welcome financial institutions, education finance practitioners, and sector partners who are committed to expanding access to quality education through sustainable financing solutions. Now, across many markets, we've seen that schools play a critical role in educating children and strengthening communities. Now, most of these schools seek finance for the very first time. However, because they're first-time borrowers, they face a lot of challenges in meeting traditional lending requirements. While access to finance is important, experience has shown us that access alone is often not enough. So there's an element of financial literacy, business management skills, record keeping, operational readiness that we need to instill in these schools that are coming to borrow for the first time. Today's discussion will explore on how investing in client capacity building can help bridge this gap. We'll hear practical experiences from our panelists who have done this before and continue to do it. Now, they are not the only ones who know what to do, and I encourage, just as Brian said, I encourage us who are on the call today to keep on typing and sharing with us your experiences from wherever you're coming in. It's our hope that this session will provide valuable insights, practical lessons, and ideas that can apply within your own institution and in the different markets that you're currently operating in. Thank you once again for being with us here today. It's now my pleasure to hand over to our moderators. And our moderators today are Divya Bell and Robina Zawede. They will fully introduce themselves as they finally move in to introduce our panelists who will be able to deliberate on this very interesting topic. And over to you, Robina and Divya. Thank you very much.
Yep. Thank you very much, Jen. Thank you, Brian, as well. Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to everyone joining us from different parts of the world, like Brian already said. My name is Robina Zawede Wandera. I am the School Finance Access Manager at Opportunity EduFinance. Just to add my voice to what Jen has already said, it is my pleasure to welcome you to today's webinar. The topic well stated already, investing in end client capacity building, that way unlocking education finance for first-time borrowers. Ladies and gentlemen, I think like Jen has already mentioned, access to education finance remains a critical challenge, particularly to those seeking credit for the very first time. While financial products are increasingly becoming available, access alone is not enough, just echoing Jen's words. Before we go into detail with our panelists, please allow me give an opportunity to my co-moderator, Divya, to introduce herself. Divya, over to you, please.
Thanks, Jane. Thanks, Rubina. Hi, everyone. How exciting to see so many of you join us. My name is Divya Behel. I oversee our markets in Asia for education financial products, and I will be supporting Rubina in moderating this wonderful session today. So if you have any questions, please do type them in the chat box, and I will be looking at them and passing them on to our moderator and panelist at the end of the session. Back to you, Rubina, and yeah, thank you so much.
Thank you very much, Divya. Thank you so much for the great work you're doing. So, ladies and gentlemen, I guess all of us are very excited to know who is in the house, which pool of knowledge do we have today to learn from. So we will be projecting on the screen the detailed profiles of our panelists, but they will be simply saying hello to you. So ladies and gentlemen, introducing to you Mr. Efosa, Head of Research and Business Development, Lapo Microfinance Bank from Nigeria. Mr. Efosa, do you want to say hello to our wonderful audience? Okay, so maybe we will get back to Mr. Fossa shortly. Let me quickly move to our next panelist. Maureen, I have listened to you speak on a number of events, and I'm just looking forward to the wonderful information you'll be sharing with our audience today. And as Head of Innovation and Projects, Balloon Ventures Limited, Kenya, we're looking forward. Do you want to say hello to the audience?
Hello. Thank you very much, Robina. I'm happy to be here and looking forward to the engaging conversation we're going to have this afternoon or this morning.
Always a pleasure having you, and thank you for making time to join us today. So last and not least, ladies and gentlemen, we have the social manager of education and health at Stanbic Bank, Uganda. She's very passionate about education. Sometimes she speaks a lot about education and health, and I'm like, oh my God. So we are looking forward to learning a lot from you, Betsy, in our today's conversation. But do you want to quickly say hello to our audience, please?
Hi, everyone. I'm happy to be here and looking forward to insightful conversations we'll have.
Thank you. Thank you very much. So our friends like Brian already mentioned we have a chat. I don't know if Mr. Fossa is back. Mr. Fossa, if you're there, please
Yes, I'm
kindly
back
say
here.
hello.
Good afternoon, everyone. Great to be here. Looking forward to an exciting engagement with everyone.
Thank you very much, Mr. Fossa. We are looking forward to tapping into your great pool of wisdom in the area of banking. Thank you so much for making time to join the call today. So our wonderful audience, before we dive into a powerful conversation with our very experienced panelists, I want us to take a little bit of time to give you a bit of background why Opportunity Edu Finance comes up with a topic like this one, just so you have a clear view as to why if you clicked on join, you should not click on
Si vous
leave
avez cliqué sur
until
rejoindre,
this
vous
is
ne devriez
done.
pas cliquer sur quitter, au moins jusqu'à ce que tout
So
ceci
Brian,
soit
if you
fini.
can take me to the next slide, please. Okay, so let me just proceed by giving a little bit of a background, ladies and gentlemen. So Opportunity Edu Finance wants us to really think about how capacity building unlocks new lending opportunities. So like Jen already articulated during the conversation, our panelists will be talking about things like assessing first-time borrowers. They will be supporting us to understand managing portfolio risks. And of course, they'll also be sharing with you their own learnings and their own experiences. During this conversation, we also would like to tap into understanding that the school finance gap isn't about just demand, it's about readiness. So in the conversation, you will hear our panelists talk about some of the challenges faced by schools as they try to walk their journey towards access to finance. But on the other hand, we will also be able to talk about the challenges faced by financial institutions as they equally walk the journey to support the schools. And as Opportunity Edu Finance, we are here as an engine to build the bridge for both sides. So as much as we are trying to help school leaders have access to finance by connecting them to the lenders, we feel like it's important for us to equip them and ensure that they're improving their financial management skills, they're improving their record keeping skills, and so that way they are able to have quality to be able to access the loans, but also be able to pay back. And through our School Leadership Academy, those of you that are our partners, you might already have some bit of information on this one. We've been able to see that loan access rises from about 30% to 42% among the participating schools during the School Leadership Academies. And on the other hand as well, we pay very close attention to financial institution risk and lending tools. We want to ensure that we are reducing uncertainty and we are expanding their addressable market. So we wanted to give you a little bit of that background, and Brian will be able to share with you to show on the screen our footprint, our focus as we try to support schools to borrow, but also to be able to improve their record keeping and everything they need to have access to finance. We are currently working with 203 financial institutions in partnership to ensure that schools are being supported, and this is in about 32 countries. This information can also be found on our website if you would like to know more about us. So I just want to quickly state, ladies and gentlemen, that we are still available in the chat, so please don't fail to click on the chat if you have any questions related to what we do at Opportunity Edu Finance or anything that you'd like to ask our panelists. So right now, I would like to dive into the questions. I know many of you are looking forward to hearing from our wonderful panelists. And so, Maureen, if you're ready, I just want to quickly run to you. I need to be sure I can see your face quite clearly. So I want to put you on a little bit of a spot to share with us from the perspective of your financial institutions. Or to start with, could you kindly briefly tell us, what does your education finance portfolio look like in terms of size, segment, clients, or first-time borrowers? how significant is the first-time borrower segment, and what kind of schools make that part of you? Maybe we'll hear from your colleagues afterwards. Over to you, Maureen.
Thank you very much, Robina, again. And it's so great to be here with such a strong panel. At Billion Ventures, we are an impact investment financial institution that funds and works between Kenya, Uganda, and Tanzania. And we've been in existence since around 2019. But before that, we were doing social enterprise work. And so a lot of our work surrounded capacity building. And so we're very vast in terms of like capacity building. And so this topic sits well with us. But at Billion Ventures, we combine investment and tech-enabled business support to support SMEs in the 3 countries that have been mentioned. But education becomes such a core sector for us. We have funded about 25% of our businesses being schools and primary schools, secondary schools, and also tertiary schools, and collectively the education of facilities in our portfolio educate almost about 82,000 students annually. And so this is from a good chunk of money that has been invested. So we have invested about $25 million in the last couple of years, and about 6 of that has gone into the school. So these are real institutions that are deeply embedded in the communities. They're serving families and who have fewer alternatives, and we work in second-tier towns. So it's basically at the core of where education is actually needed. And in terms of the schools that we see, they're typically owned owner managed and operating in like second-tier towns, as mentioned, and surrounding rural areas. So they're private schools that have been started by either former educators that have been started by different other business people. And so they're trying to solve a challenge in terms of access to education, either through where alternative government facilities are maybe not able to do that. And so right at the last mile that we're able to kind of like mainstream finance simply. And also we are seeing that this is where finance actually doesn't reach. And many have been running for years and have genuine track record because they have been in existence in these communities for quite a while. But then from a lender's perspective, if you're sitting with it, you kind of like see that this is not an eligible portfolio reach, and they're largely invisible only because they do not have credit history, they do not have audited books of accounts, and they also do not have any relationship with formal financial institutions, maybe from a personal level, but from a business standpoint, they would not usually have a relationship with financial institution. And so there's kind of like this gap between operational maturity, because we're saying that they have been in existence, but then financial readiness as an institution, they do not have that. They have no records that can actually show an investor that this is a bankable facility. And in general, we see about 40% of schools that come to us are first-time borrowers or people that have actually not accessed a business loan before. And so that's where we come in. Our job is to make these schools genuinely viable and visible and kind of like included in the financial systems, and the right combinations of capital and support becomes really key. And so we provide them with debt facilities that they can be able to do school improvements. They can be able to kind of like improve their operational cycles in terms of like maybe school feeding, as well as other operational circumstances in the schools. And so we're finding that more and more, being that we are in the rural areas and in second-tier towns, there's a dire need for us to be able to invest in these schools. But then the schools are there, they exist, the financial institutions exist, but then that linkages between the informality that exists, but also the financial readiness between schools and what is available in the market as capital, in form of capital, is where we kind of like come to plug in. And as mentioned, we have invested in about 200 schools. And so it's like a big chunk of our portfolio. About 25% of our portfolio is in schools. And we see that schools have good repayment cycles as long as there's a good combination of capital and support. And I think that sits at the nexus of where we serve in Kenya, Uganda, and Tanzania. But it'd be quite interesting to also hear maybe from Efosa in terms of Nigeria, whether that's different or how they're able to kind of like also plug into that. So Efosa, back to you.
Thank you, Maureen. That was great. You hit the nail on the head. It's very clear that the challenges across Africa is almost the same. When the West says that Africa is a country, actually it's truly a country. The challenges you see in the suburbs of Accra, the suburbs of Kigali, the suburbs of Nairobi, and of course the suburb of Lagos are almost the same. The stories you just shared about the experience is similar to what we have here in Nigeria. Lapo Microfinance Bank being the leading MFB in Nigeria with about 34 states and over 500 branches, has deepened its education finance portfolio since 2017. As of today, our education finance portfolio is about 1.3 million US dollars. And the surprising thing about us, we weren't deliberate for this, but when we disaggregated data, we said that almost 78% of that numbers are first-time borrowers. These are people that are seeking loans to deepen their school. And fortunately for us, as a bank that's big on impact, our focus has always been to improve lives. So the majority of schools we target as low fees paying schools. And we found out that over the years, we've been able to engage them. I think something that is also clear is that about the demand is always there from their end, but the challenge is their readiness to access credit. The truth is that it's not that whether credit is accessible, it is that the demand that is there, are they ready to access the credit? I think that's part of the major challenge we face when we try to engage with this school. We see people that have basically not done business with banks. They just have a small private school in some suburbs of the city. And of course, they need funding to expand their business. So as a bank that's big on impact, we continue to engage these small school owners and help them grow. And basically what we do, even in our product development, it has helped us to break up product development, even requirements in accessing loan. For our first-timers, for some categories of school, they can basically access our EduFinance loan without having a formal registration with government, because that is how far we try to bring them on board. Because what's very critical for us, we want to go the journey with our customers. So we are very much ready to take this first-time school owners on board, begin to grow with them. Unfortunately for us, we're also seeing where school owners have moved from first loan stage to about the 7th loan stage because they saw the journey. Some, when we onboarded them, they were not even formally registered. But before they get to the 4th, 5th loan cycle, we've gone the journey and the distance with them, and we formally registered them with the Ministry of Education, even in their bookkeepings, which is a major challenge you face when you try to engage a first-time school owner. So it's very critical that we focus on these persons. They really need us, but they are not prepared. We need to get involved with them. We need to join hands with them to help them develop their book. I think that's what LAPO is doing in trying to engage first-time school owners.
Thank you very much, Mr. Fosa. Thank you, Maureen. I like the way you rolled on the ball to each other. So I think let's also now hear from Betsy Stanbic Bank. If you can quickly share your experience in about 3 minutes so we can hear what you have to say.
Hi, everyone. At Stanbic Bank, we are privileged to be the leading bank in the education space. And we appreciate that we cannot grow unless the key sectors in this economy are growing, and that's education and health, which I'm privileged to be heading here at Stanbic Bank. For the education sector, our portfolio in terms of numbers, I could put it, the whole education institutions in Uganda, they are around 50,000, and that is, primary, the lower, the secondary, and the tertiary institutions. And at Stanbic Bank, we bank more than half of that number. Our book is almost 30,000 plus. And for the borrowers, or for the first-time borrowers, or the segmentation that we look at Stanbic, we have your top-tier corporate names, and this is where most universities sit. the public universities, the private universities. Then we have the commercial names. Commercial names, you look at schools or institutions that would be turning around annually. I'd put it at, in terms of revenue, around $100,000 or $200,000. And then we have the other segment, which is enterprise. The enterprise segment, or SME, those are the startups. They are driven by passion. And this is where we find lots of challenges in terms of record keeping, financials, and these are the clientele that.
Okay, so I think, Betsy, we can't hear you anymore. When you get back, let me know, then we can quickly proceed from there. I think maybe as we wait for her, I really like the idea that, okay, are you back? We had lost you.
I'm back. Okay. Apologies.
Yeah, sure.
Yes. And I was sharing that the biggest chunk of first-time borrowers are in the category of enterprise or SME, small and medium clients. They are opening shop, they are coming to borrow, they have the passion. Some of them are previous educators, they have been teachers for 20 years, 30 years, and now they want to go into the private space. But we appreciate that it's a partnership, it's a journey, it's a relationship. And we have seen that once we handhold them and we move the journey, and they share with us their plans, 3-year plan, 5-year plan, 1-year plan. We are able to guide them so that they take the right products, and then we solution according to their particular needs. So they are interesting categories, and once properly, managed, properly taken care of, they in the 2-3 years, they upgrade to the category of commercial names or even corporate names. So it's an interesting pool, and yes, that's how we are supporting the first-time borrowers. Thank you.
Rubina, you're on mute.
Oh, I'm sorry. So I was saying.
Rubina, you're still on mute, I think.
Okay. So I was saying that the most interesting bit is really discovering that we are coming from different settings, but we almost have the same kind of problems that we are addressing. But I like that the enthusiasm, the aggressiveness that we have, and we recognize that these schools are literally partners. So you shared something very critical, Maureen and Mr. Fosa, especially when it came to the readiness of the schools to borrow or to access finance. That takes me to our next question, which is about the lending criteria. And Mr. Fosa, I'd like to put you on spot for this next question to share with us your experience, maybe in about 3 minutes. Do you want to share with us, when a school approaches you for the very first time with no credit history, what are some of the things that would really make you make a decision to lend to them? And I mean, how much does the school's story matter versus the financial numbers?
Thank you, Robina. This story actually matters. We live in the communities. We see the happenings in the communities. So when we see these first-time borrowers come across us, we listen to them. We hear what they have to say. But critically, before we take a credit decisions, there are 4 major factors of things we consider. We need to look at cash flow stability. How stable is their cash flow? And we also need to check school stability and acceptance within the communities. Because the truth is that a school in a community that is not well accepted within the community is going to eventually have a challenge. So those factors we look at. We also check the governance structure of those schools. And we also check their record keeping. How much do they keep their records? What is the number of students they have? And of course, the critical C of credit, which is character. This is very, very also important. We check these factors because we need to see what these people are up to and what they've been doing. Because for cash flow stability, we basically look at how consistent is the fee collection of the school. what is the revenue trends? Because when you look at these things, you begin to see that the revenue trends does not follow a pattern. It could happen at the beginning of the term. It could happen close to examinations, depending on the school structure. So those are the critical things we also look at. We also check how do they engage, how much do they pay their salaries? What is their cash flow like? Because basically, financing is dependent on cash flow, because we must run cash flow based analysis before you are able to access credit for us. So whether you have sufficient record, but sometimes what we do, we bundle our products in a way that it is not just the credit. We build financial literacy into it. We build financial management into it. This comes as a bundled product, because oftentimes, depending on the loan side, sometimes you are expected to go through a training season. It could be for 2 weeks, it could be for 3 weeks, where you are brought up to speed on how to manage your books, on how to manage your expenses. Because the truth is that some of these persons went into education not necessarily out of motivation. In some cases, it was a survival instinct that led them to them. So it is critical you guide them through the journey, because if you do not help them through that route, it becomes difficult. Like we said from the beginning, the demand is not the problem. I can tell you the demand is there. And of course, the supply end where we play is also there. But the question is that the people that are generating this demand, are they ready for this? So I think that's where financial institutions come into play. So our decision is not just, no, they must have financial this thing before we listen to them. We walk the road with them. We engage them, discuss them, help them build capacity. Because one critical lessons we've even had from this is that proprietors that have come from Opportunity Edu Finance, Organized School Leadership Academy, tend to have this basic knowledge when they approach us, compared to those that have not even had those experiences. So basically what we do, we look at these 4 critical factors and use it in taking credit decision. Not necessarily because you must have an audited decision. Like I even said, we have a decision now that even when you are not formally registered with government, you can access credit with us, except it is dependent on the loan size you are going to access with us. So basically what we do, we help you prepare over the years. Before you get to that limit where you need to take a bigger chunk of loan size, we would have prepared you, we would have helped you formalize your registration with the ministries of education. I think our legal team is also helping us play a big role in this regard by regularly engaging with our school proprietors that are clients with us, and see where legal services they can provide in helping them regularize their registration with government. This is very critical. I'm also sure that the stories might not be different from what Maureen or Betsy has to share. Maybe Betsy will need to hear what's happening in Uganda in this same front.
Thank you. In Uganda, it's an interesting environment, and at Stanbic Bank, we have what we call pre-scored lists. We don't have to look at your financials. Your cash flows alone can speak for you. We pre-score according to the bankings, the daily bankings, and you remember that schools are cyclic in nature. For secondary schools, you have 3 terms in a year, and for universities, there are 2 semesters. So by just looking at how much school fees you're banking every term, we pre-score and give you a facility purely unsecured. We don't need collateral. Purely, we don't have to look at your audited financials. We don't have to look at management accounts. We just simply go with your cash flows and give you the money, how much school fees you collect. But we don't only make decisions based on cash flows. Like my colleague has shared, character is one of the most important story in all this. It doesn't matter how perfect you're keeping your books. It doesn't matter how your numbers are brilliant, but and it's a society, you know. By the time someone is investing in education, they are not your average citizen. They are known, we know them. Some have been in other businesses, and then they are just diversifying and entering the education space. So character contributes a lot. Also the conditions right now where we are in Uganda, education is one of the most profitable, businesses when it comes to private institutions. When you have more than 70% of your population as youth, and then we are almost touching 50 million as a population, for 50 million Ugandans, and we have 25 million in schools. So meaning, and that's why it brings in the story of private is contributing 50%, government is contributing 50%. The government institutions are very strained, and so the private players are coming in strongly. You open a school within 2, 3, 4 years, if it's in the right location, the numbers will be swelling to 1,000 and 2,000 plus. So it's one of the most lucrative. So we don't only look at the numbers, like we said, the story of the institution. A very interesting example last week, I was visiting one of these clients whose numbers don't look good at all. He struggled from the pre-COVID season. But last week we took off time, sat with him, listened. From the numbers perspective, you wouldn't lend to him, but his story is he's in a very the location of his school is in a slum area, low-income earners, taking care of the kids of police, armed forces, and his school fees is not structured that it's a one-size-fits-all. How you come in, you can come in and pay $200, another one can come in and pay $300, depending if you bargain. So that drive the story of why he set up the community school, on what he's trying to do. We're able to give him lending of almost $100,000 just because his story. He is not into the business for the money. He's into the business impact. He's into the business to change lives. So a story is very important in a space where we operate. Yes, of course, the financials also play a part, but stories really, really matter. Thank you.
Thank you. Thank you very much, Betsy. I mean, that's really amazing. Maureen, do you have anything unique to share with us in probably a minute before we move on?
I think it's not unique as everybody is mentioning. I think the two things that really matter, like the cyclic nature and unlike Betsy, we do not have the financial data, or we do not have how they're banking. So we have to do the dirty work ourselves. So we have to kind of like, can the school actually demonstrate that parents are actually paying, and what are the patterns that we are seeing with these payments, right? And so we have to know that the school owner has some level of engagement with those numbers, so that we can know that they actually care about the school and how it performs. And we're not expecting polished financial statements, as everybody's mentioning. And so it comes down to kind of like doing cash flow work and collecting a lot of that data. And so most of our work is in that. And so self-awareness for the entrepreneur is a proxy to whether how they are going to behave as a borrower, because as we're saying that some of this information, or some of the school owners are maybe former educators or businessmen, and so most of work they have done is not related to like kind of like the business acumen or the business side of things. And so we have to kind of know, are they really keen, and does this person understand their school as a business? First of all, do they actually see it as a business? Because if they do not, then essentially what they're going to do is a passion project that kind of like funds their other lifestyles and funds other things. And so the decision is based off on, are they making decisions based off on evidence, or is there any informal evidence that is actually informing this? The narrative also tells us about their repayment likelihood, rather than kind of like just seeing financial statements or bank statements. And so character is quite important, as everybody is mentioning, character of the actual entrepreneur, just so that we can be able to see. And so if there's inconsistencies for us, usually that's a deal breaker. So in terms of the story and how we're seeing patterns, because we're also saying that some of the schools we're funding, as Betsy is also mentioning, they have bursaries, they have like subsidized school fees, and so the basic question of revenue cannot answer the complete question on whether we can be able to lend. So we have to be able to kind of like go beyond the financial information to see what else is this school good at. Are they able to follow up on repayments? Are they creating any impact in the community? And if so, how are they doing that? So yeah.
Perfect. Thank you so much for that perspective. And thank you, Mr. Foster and Betsy, for the perspective you have shared. I suspect some people are already taking some notes, so others are quietly revising their learning strategies. So thanks so much. You know, what you have already shared takes me to the next question. And the one key thing I have picked from what all of you have shared is a well-informed borrower is every lender's favorite borrower, maybe right after the borrower who repays on time. So now we recognize the idea of the importance of capacity building. And Maureen, before we move forward, I just want to quickly begin from where you ended. When does your financial institution provide capacity building, maybe financial literacy like you mentioned, or business management training? Is it before the loan, during, after? How does it happen? And have you ever delayed or conditioned the loan?
We have to sit at the nexus of before and after and during, basically, only because it's important across the loan cycle. And so as I mentioned, we have to do a lot of the data work. And so that's financial literacy, just kind of helping the entrepreneur to actually arrange their financial information. And so there's some pre-investment readiness that has to be provided for this person to be able to actually even access and unlock that capital. And then once that has been done and we have provided the facility, then we also provide them with a dedicated post-investment manager that helps with not only the monitoring, but also the capacity building. So we're saying that in that during period, there's elements that they have to do, and there's also behavioral patterns that you have to curate for this person to then become the executive that we're talking about, only because during then you have to look at the financial management practices at the school. Do they have a budget? Do they stick to that? Do they have a board of governance? And how is that being reviewed? What are the variances and how are they managing that, right? And so some of the conditions that we have to put in place are you have to kind of like go through a financial literacy. And then we're also looking at corporate governance in the school and how that is being improved. We're also looking at things that are specific and kind of like closable in a short term, just so that we can be able to create a mechanism in the school that helps them to run their business further. And something that Ifosa also mentioned was just walking the journey with these people so that they can be able to unlock more capital, either from us or from other financial institutions. And so we find that some of the borrowers have 5-6 loans with us and consistently are just working to improve particular segments of their work. And we have seen that most sustained impact is through ongoing support during the loan itself. And that ongoing support or relationship changes behavior in a way that one-time pre-loan training is rare or will rarely do. And the accountability of repayment is also in itself powerful. So we have to kind of start to create, and one of our priorities is kind of like trying to create credit scoring for them. So we do both, because if we're saying that they are first-time borrowers, they do not already exist in the credit referencing bureaus that exist in the country. So we have to create a credit scoring system that works with them through the data they are providing, because then you have their financial data, or you're able to collect their financial data on a termly basis or on a monthly basis, and then you're also collecting their repayment history, because on a month-to-month basis or on a term-to-term basis, how you're getting the repayment history. And so that on-time payment, that delays in the payment. And so that accountability of repayment becomes such a powerful tool. And this will becomes a powerful tool to actually unlock credit for them in the future.
Thank you. Thank you very much. That's pretty interesting. And Betsy, maybe just for you to add on to what Maureen has shared with us from the perspective of Stanbic Bank, have you ever delayed or conditioned a loan on school completing, some form of training fast, maybe in about 2 minutes?
Yes. I would like to look at capacity building from the financial space, and also into continuity, taking into account that most of the schools we are dealing with are private entities, and then you want to take care of the aspect of the human issues. A director is aging or not well, and then there are some things you're demanding to see in place. You're coming for a facility or a long-term debt of 10 years, of 8 years. Just like Maureen said, the corporate governance part of it, do you have a board in place? How are you preparing the second generation to take over? Because you're in a space, you're in a business that is socially impacting and sensitive, where we have seen where some directors pass on, and then the numbers completely go down because there was only one key person, driving the numbers. So we have laid some of these disbursements of saying, we need to speak to you. What plans do you have? Whom are you grooming to take over your business? What plans have you in place to prepare your children or the other directors or the next generation to ensure that this is a going concern? Yes, in some places we have laid decisions to give credit or to give loans because we want to see some of these, policies or, boxes ticked, and we know that our money will come back. Yes. We
Thank you
have
very
great
much.
payments.
Thank you
Yes.
very much. It appears like capacity building is a little like teaching someone how to ride a bicycle before giving them a
Sure.
motorcycle. Yeah, thank you so much for sharing. Mr. Fossa, I want us to quickly draw our attention to our next question, which is kind of related to the previous one. Looking at your education finance portfolio, where have first-time borrowers surprised you positively? And what did that teach you as a financial institution in terms of assessing schools upfront?
Yes, I think in terms of the NPL, we're shocked that the first-time borrowers have performed our MSME. The first-time borrowers for our Edu Finance loan had performed our MSME loans. But I think we also disaggregated those data, and maybe the product structure could also be a major factor for that, because unlike our MSME loans, our Edu Finance loan repayment has the option of monthly, but I think the most common options of repayment is timely. Maybe because we align repayment with their cash flow, that has been a big factor in the way they handle repayment. But however, we can also not undermine the role capacity building plays in that, because of the kind of financial literacy, cash management, school management sessions we have with our clients, even before, during disbursement, and post disbursement, might have also been a factor. In fairness, the kind of engagement we have with our school owners is different from the engagement we have with our MSME owners. So that could be a major factor why their performance far outweighs the performance of our client. Because when we engage with them, we run them through business management skills, record keeping skills, owner's character and their track record, how it's important that they keep integrity in the community they live, that it will help the school grow, and those kind of conversations. And every school has a dedicated relationship officer. Many years ago, we used to call them credit officer because they were focused on credit. By the time we reposition the mind of our credit officers that no, you are not just a credit officer, you are a relationship officer. You are managing this client and this school over and over again. Engage them before, during disbursement, during their repayments, and post disbursement. So those kind of relationship has really brought our school owners close to various, and they surprised us. I will really be frank in their repayment. Like I said from the beginning, the NPL for our first time borrowers really surprised us. They are doing better than we imagined compared with other of our products. Those are the things we didn't see at the beginning, because one, for us, we thought we took a risk with them. There were no data to take critical decisions. Most of them have not been captured into the credit bureau registry in Nigeria, but yet they've been able to generate a good credit history. And the good thing also, we've been able to share this credit history with the credit bureau. So now they would be basically having a high credit score on the credit bureau because of those relationships. I think that was a major surprise that we've gotten from that. I don't know if Maureen's experience is similar to what we have here. I would love to hear your thoughts on that.
Okay, Fosa. I think it's quite similar. And for us, I think one of the positive surprise that we've seen is resilience, and just how schools can be resilient even while operating under real external pressures. So like holidays, inflations, and COVID disruption. We know in the last couple of years, schools especially were the number one most affected sector because then they had to be out of school for, I think in Uganda for almost like a year as well. And people were still able to kind of like bounce back. And this came only from the relationship that they also had with the communities. We find that a school is actually anchored, more specifically in their neighborhood. If they've been existing in their neighborhood for the longest, it's quite hard for them to just close or the owner to default because their reputation is on the line. And so in a very tangible way, reputation and numbers in schools go hand in hand in terms of like whether I want to bring, and that social collateral turns out to be kind of like a powerful driver for repayment behavior. And so that's something that as a lender, you have to be keen on. And this has taught us to kind of be more careful in our community, like assessing community embeddedness and how long schools have been operating. What are the parent retention rates as well? Is there kind of like a waiting list? Has the fees been consistent? So such soft signals show that schools can actually, if they're at the core of serving the community, they can actually thrive, because you're thinking that not that many parents would want to take the children out of schools if it's a really good school. And so we've been consistently surprised by such elements and how you can also quickly turn around a school if there's that in place.
Thank you. Thank you both for sharing those wonderful perspectives. And I just want to quickly remind you, our audience, partner financial institutions, and everybody that has joined us today, please keep your questions coming. And I'm sure you can believe me that you have wonderful panelists that are giving us great information. So Maureen, before you breathe, I wanted to quickly ask you a question that is directly related to what Balloon Ventures is doing. I know that you work closely with last mile school operators, and there's growing interest in using AI across the world and data to make smarter lending and support decisions. How are you doing on this one as Balloon Ventures in practice?
This is a really exciting part, and it's kind of like we're clear-eyed in terms of our limits, but also our excitement towards it. So in practice, because we have done a lot of work to collect the data, so we're trying to kind of use AI to aid, first of all, in credit scoring, but also in just the financial understanding and just understanding the cyclic nature and the sector knowledge that we can be able to tap into with this. And so we have ongoing data sharing from our clients. We ask for all our schools to actually, on a timely basis, to share data with us on financial management, but also enrollment. And so we're able to kind of like make decisions a bit faster with a big pool of data. You can kind of use that to kind of like match and counter check what is happening in different sectors and with different. So we have used this with our developers to kind of like create benchmarks, and we have benchmarks for the different schools in different areas, and you're able to kind of like map through different regions and how they're performing. And some of the key lessons that are coming up is just the differences between urban and rural schools as well, and how the payment or the school fees payment structures also, and the cyclic nature of the school fees payment structures are, and which schools then perform better with that, what kind of numbers we see that would actually make sense. And so moving fees tracking, we're doing enrollment records, which help us to analyze and have a lot of conversations in terms of just building a data infrastructure for the education sector and the last mile context. And we have been able to see that help us improve our decision making from 14 days to about 7 days. We can be able to kind of like, once you have brought in all your information, we can quickly turn around our assessment periods, but we can also do predictive repayments. So we're doing a lot of scoring as well as just overweighting factors in terms of like proxies between like wealthier regions and just the credit worthiness as well. And as a result of this, as I mentioned earlier, our schools are able to kind of like teach or educate about 82,000 people, and we're able to kind of also scale our investments in schools, and we're hoping that in the next couple of years we can move that portfolio contribution from about 25% to almost 40%, because then we're learning more about schools, and at the base of it we want to apply that. But then I think far beyond that, we're also introducing AI in our capacity building. So we have built a real-time chatbot, but also tapping into the already existing frameworks that people already use. So WhatsApp is a key element of I guess anyone in Africa or anyone in the world basically uses WhatsApp. And so just using WhatsApp as a virtual portfolio manager or relationship manager or whatever we want to call it to provide that. And so we have kind of taught AI that these are the needs of our schools and this is the support that you can be able to provide. And so they have it on their hand, they can be able to chat with it and interact with it to get timely check-ins, to also get timely advice. And these early interventions are far more effective, especially when it comes to recovery. They're also far more effective when it comes to just the challenges that we are alluding to, that schools are facing on a day-to-day basis. And so data helps us. And I think every time I have a conversation with anyone, I kind of urge them to continue to collect data, because once we are all collected data, as we're mentioning, like credit reference bureaus need to be fed data. We also have to be able to kind of like create capacity building systems that work for these schools. And so learning or ecosystem learning is also critical and for that. So we're happy to kind of like share any data that people might want.
Thank you, Balloon Ventures, for the gift of sharing that wonderful information. What a beautiful story. Our audience, I promised you that we'll be sharing learnings and experiences from these wonderful panelists, and I'm sure you're taking notes already. Betsy, coming to you before, I think if time allows, I'll end with Mr. Fosa. This should be our very last question. Betsy, I remember we had a conversation and you made a distinction that you would like to unpack today, possibly, if it's okay. The idea that you mentioned that borrowers can be first-time education borrowers, but not new clients to your institution as Stanbic Bank. How much does this existing relationship change your risk assessment as a bank?
Thank you, Robina. Yes, a client or a school can be a first-time borrower, but not a new to bank. They are existing on your book and you're simply collecting their school fees. You have a relationship of 10 years, 20 years. Like I said, we have a big section of schools who are cash rich. They are not constrained, they don't borrow, especially for things like working capital.
Everybody is just looking for a way to be happy and have peace.
For like working capital, you don't see these schools borrow. Like I said, they are cash rich. For things like paying their suppliers, paying salaries, they are not coming to the banks. But when there is a need for structured development loans, they want to put up other campuses. We have schools who have 8 campuses, who have 6 campuses. So that calls for a lot of equity, and the directors cannot contribute 100%. So when they come, we already have a history, and it really improves on their risk grading. And what comes with risk grading comes with lower interest rates and faster loan processing. But also what forms our decision, or what helps us to to give them exceptional, packages is because, like I said, they have been with you. And when we are packaging these products, we do not sit in our offices and just come up with products. We have what we call a CVP, or a client value proposition. We first listen to them, and then we create products or services that make sense to them. So most of the existing clients who are first-time borrowers, they are institutions who have been in existence for 20, 30, 10 years plus, and they are coming. We have had, one of the drivers in Uganda has been that in the last 10 years or so, there has been a shift in the science curriculum. The government, the learners have been pushing to have a science-based. So schools are coming in to put up high-end or specialized labs, laboratories. And then we also see a high drive in the international curriculum, that is Cambridge and IB. So you're having a school, they have a national curriculum, and they want to set up a campus for the Cambridge curriculum. So they are existing, they're not borrowing, but because of the need that has come up, when they come to borrow, we have a beautiful risk grading for them. We grade from 14 to 18, those numbers. And the lower the risk grade, the lower the interest rate, and the higher the TAT, and many more conditions that are favorable to them. Yes, so you can be an existing client, but a first-time borrower. And they enjoy lower rates, which come because of lower risk grading, because it's an existing relationship. Yes.
Thank you. Thank you very much, Betsy. That's really important to know. Mr. Foster, if you can just add your voice to what Betsy has mentioned. Anything unique from your end before we close this?
Yeah, thank you, Rubin. And I think Betty was very spot on. The way you engage with these clients and the relationship you build with them. The truth is that these first-time borrowers do not just want to go and leave. They want to go the distance with you. The opportunity to grow and take probably from just 6 classrooms to 12, 18 classrooms over the years, it's a journey they are willing to go with you. Like in our experience, we also have similar cases. We have cases where they were already our existing clients, but they were not even accessing credit. In some cases, they were just saving, trying to build capital. Maybe we begin to engage them, begin to provide financial advisory services to them, and begin to see the value of getting credits to grow their institution. And we were able to onboard them, and the opportunity to grow with us has been something that was well received from the school owners. And over the years, you will, like I said from the beginning, you see some cases now. We now have, I think in our Edu Finance portfolio, we have customers that are in the 7th loan cycle, and they are still very consistently. You see people at the very beginning that were taking about $100 to $200. Today, they are taking as high as $5,000 credit for school improvement loans. So I think this has made them build confidence in them, and they are much interested to continue to do business with us. And we've still not stopped with providing the capacity building for them, because they are big, because as they become bigger, their needs changes. No longer just the financial literacy or financial management. You begin to help them develop growth plan. So our relationship managers are specialized persons that are trained on education management to see on how they can help the school grow. Because in terms of impact, I'm sure our entire Edu Finance portfolio, in terms of the student size, should be going to between 800,000 to 1 million. That's how much we've impacted these numbers, because we believe that we do not just want to come and dump credit on them. There's more to credit in this space. We are big on impact. We want to go the distance with them. And it's a journey they are very strong and willing to go with us. And over these years, it has been an interesting one. For us, this is just the beginning. We want to take our Edu Finance portfolio to as high as 30% of our entire loan book. It's something we are committed to in the short to medium term, and we want to do. And the demand, like we already know, is there. So we also continuously help them build capacity. engage them internally and externally, relate with regulators to do some waivers where necessary for them to get the necessary approvals. These are the kind of engagement we are having with these schools, and we are so sure maybe 2-3 years time, the story will be different across board.
Thank you very much. This is really nice. I'm just so happy that we invited the three of you, and thank you so much for sharing those beautiful stories in the area of finance. So ladies and gentlemen on the call, I think you please join me and throw flowers to our panelists. I think they've done a massive, wonderful job. Thank you so much, our panelists. Now it's your opportunity to ask them any questions. If you can't unmute yourself and ask, please, you can put your question in the chat. They'll either respond directly or you will get a response. Okay, I see 2 hands up. I need to be sure I can pronounce the names. Right. I see Paul. Paul, do you want to go first? And then Rotimi will come next, please. Thank you.
Right, yeah, thank you very much, Romina. I appreciate it. And the panelists, great job they've done. Fantastic. But I have a couple of questions for them. The first is, I heard when they mentioned the fact that they fund just schools, meaning they fund institutions, organizations. So are there plans or there are products in future that may consider funding the students themselves? And if so, how will such kind of product be rolled out, and how do they plan to bring that into the playbook? Thank you.
Thank you very much,
Okay, maybe
Paul.
I just take that.
Do you want him to repeat? Okay, Paul, do you want to quickly repeat your question for this episode, please?
No, I'm clear with the question. Okay. Yes, girl. Thank you, Paul, for that question. Our EduFinance loan product is not just school improvement loans. We have product already designed. I think maybe Opportunity EduFinance deserves a round of applause. They supported us in developing school fees loan products. I think these are products that are available. As of today, that's almost like a little above 20% of our entire EduFinance loan portfolio. So we've already developed products for students there, both in higher institutions and for parents that wants to pay for their children in lower institutions. So these products are already available in side by side running with our school improvement loan. For us, it's available.
Thank you, Mr. Foster. So I hope, Paul, your question has been responded to. In case you need further clarification, we'll be able to give you extra information. So Rotimi, do you want to ask your question, please?
Can you hear me now?
Yes, please.
All right. Thank you so much. Thank you for this session. My question goes to Efosa once again. For EduFinance for school, I want to know, how do you manage diversion of funds? How do you manage diversion of funds? Because from the discussion, I can see the cash flow helps in repayments, it helps in recovery. But in case you have diversion of funds by the school, how do you manage it to get the money, recovered? Thank you.
Okay, thank you so much, Rotimi. Something that is clear that humans will always be humans. Yes, you can do all necessary assessments you need to do. Whatsoever they decide to want to do with the money is something you don't have control over. But however, the kind of due diligence we do, in fairness for EduFinance portfolio, a substantial part of it, I should say over 98%, I've not had any case of diversion. Maybe because of the change in macroeconomic conditions, things could become difficult. Or some insecurity in their locality could lead to parents pulling out their kids from school, imparting school fees collection. Those could be a factor, but for diversion of funds, it's not a major issues with most of our schools, because like I said, because of the kind of engagement we do, there are some cases where we do invoice financing. You likely want to do equipment upgrade. We can decide to pay directly to the vendor that is doing that. You likely want to buy a school bus for your school. Instead of just disbursing the cash to the school proprietor, we can decide to make the funds available to the car dealer that you are buying the school bus from. So those are some risk assessment criteria that we also consider when we engage some of those schools. So cases where they are default as a result of diversion, which in my opinion is very rare. I think we have a very structured collection process that starts from the relationship officer, who is the first monitoring line, and follows by the recovery officers. And when it becomes very difficult, we have recovery agents that take up this case and engage these clients. But maybe one or two incidents with our MSME loans. I'm not sure. We've never had cases where we have to use recovery officers to run after our school proprietors. With respect to them, they have, to a large extent, barring economic uncertainties, they've lived up to their billing, because we've termed, when we had the challenges was the early phase when the repayment was on a monthly basis. Since we aligned the school fees, the cash flow to the repayment period, it became easier when you term that, okay, instead of paying this month where collections will be high, and you pay next month where collections will likely be no or zero collections, we tend to now align their repayment to their cash flow when school fees is being collected. So since we have that structure, I think that's reduced drastically. That is no longer a major fear factor for us at Lapo Microfinance Bank.
Thank you very much, Mr. Fosa. So, Paul, I hope Mr. Rotmeet, Paul, and the rest on the call, you're happy with the responses. But we also want to mention that please feel free to put your question in the chat. Even after the webinar, we'll be able to respond to your questions. So I just want to quickly run to John, if you're there. And then after John, we can have Stella ask. John, please.
Yeah,
We can hear you, John, please. If you can just speak up, please. Okay, I can't hear you, John. Maybe you can drop your question in the chat, please, to save time. Stella, if you can quickly unmute and ask.
Can you hear me now?
Okay, yeah. John, yeah, we can hear you now, please. Go ahead and ask your question.
Thank you very much. Yeah, thank you. Very interesting discussion from the panelists and then from the organizer. Thank you very much. One of the questions that the school proprietors or the this education loan, one of the issues they have is regards repayments. Ideally, most of the facilities we have in the banks are monthly repayments, but some of them are always asking for what's it called, timely repayments. So if I may ask, how do you handle that? Do you do that? Do you structure those repayments to be able to accommodate? Because the cash flow comes in timely when the school resumes for each time when they resume. So how do you handle the cash flow at this point? Or sorry, how do you handle the repayment at this point in time? Thank you.
Okay, so maybe that question can go to Maureen for now. Maureen, are you happy to respond to that question, please, from John?
Yes, I am. So we've had to kind of go with the demand side of things, where we have had to tie our repayments to timely payment, only because this is what is expected, and this is also the cycle of the cash flows. So if we're thinking about cash flows, we also have to think about how to structure the repayments. On a normal business or normal SME, they're getting money on a day-to-day basis. So they're able to kind of keep up with the monthly obligations. But then in a school, you find that it's term payments. And what we have done with that is also in the term, we break it down into two. So we have immediately after the first month, once people are back to school, only because most people will pay in that first month, right? And then the second payment will come in the second month, because that's when you're expecting the bulk of the payments to have come through. And then in the third month, usually payments have started to slow down. They have more expenses than payments. So it helps us with also risk management, because then that diversion was being discussed is not there as much. And I think one of the other things that we also do is we do procurement evidence, I guess answering questions that had been asked to Efosa about kind of like helping with diversion of funds. So we ask that for every procurement. So if it's a construction element, we also have our third-party consultants that come in and do BOQs for the construction, and that helps us to give a good picture of the amount, because we have also discovered that if you give a lower amount than what is expected in a particular project, people are more likely to actually divert that funds because the money is not helpful to them. So you have to kind of be conversant with such nuances.
Thank you very much, Maureen. John, you asked a question earlier, and somebody in the chat is asking which financial institution you work for. If you can quickly share the financial institution you work with. Mr. Fossa, there is a question in the chat for you. If you have a bit of time, you could respond to it on in the chat, so as for us to save a little bit of time. Stella, please ask your question, and then we'll go to Philip. If time allows, we'll have just one extra person.
Good evening, everyone. Good evening.
We can hear you. Hello. Hello, Stella. We can
I'm fine.
hear you.
Good evening.
Good evening. How are you doing?
Thank you so much for this opportunity. I'm good. Thank you so much for the opportunity. And my question is simply on the school owners. And I want to ask, there are some school owners who are interested in accessing the EDU loan, but because they don't have the actual documentation regarding the license in operating schools, they might be denied loan because they don't have the maybe government approval in running their schools. And my question is that, so what is the waiver for them? Is there a waiver, or is there any way they can, the condition can be reduced for them to enable the access loan in the absence of those documentation?
Thank you, Stella. I think your question is very clear. Betsy, I don't know if you're happy to respond to this really quickly. And then
thank you, Robina. If I may ask her to rephrase her question.
Okay.
All right. I said for the school owners, yes. Some of them are yet to have their full documentation or registration, and for that they are denied access to this EDU loan. My question is that, is there a waiver, or is there any way the EDU financial can help or assist the school proprietor or proprietors in accessing loan, irrespective of the fact that they don't have the full documentation or license to operate those schools?
Thank you, Stella. When it comes to schools and the registration, one, they first register as a business, then as a business through the registrar's house. Then again, they also register with the Ministry of Education to be licensed and recognized as providers of education services. So with the business registration, it's easier with the ministry and the government and the policymakers who give up to 2 to 3 years before they can give license. So once a school is registered as a business, it is sufficient, it is a legal entity, it's recognizable, and we can lend to them before even they get full licensing from the ministry. When it comes to edu financing supporting, that I believe Robina will shed more light and the team from Edu Finance, but Edu Finance comes in more of preparing a school, making them more bankable in terms of financial literacy and all that. But when it comes to being a legal entity, that is now completely a discussion under Registrar's House, under the licensing ministry. So yes, once you are a legal entity, you can borrow. I think that's,
Thank
I
you.
believe, Stella, that provides some clarity.
Yeah, I think so. So Stella, I think we might have some bit of more information for you in the chat. I feel Mr. Fosa might have a little bit of more information for you, depending on the setting where you are. Yeah, but thank you for asking your questions. Yeah. Philip, your hand has been up for a very long time, and I know time is not our friend, but please ask your questions.
Yes, Robina, thank you. In fact, my hand, I feel a lot of pain in my hand right now.
I'm so sorry.
But that's all right. That's all right. Okay, so not really to ask a question, but first of all, I mean, share my appreciation for these sessions. And I honestly wanted to lean on Fosa trying to explain why you hardly have issues with fund diversion for school lendings. Basically, schools are very stable businesses, even if some people who have not been taught how to handle businesses are running schools, and they run it as more like just I don't know whether I call it charity organization or something. But for those who know how to run school businesses, schools are very stable businesses. There are several streams or several lines of income, and apart from school improvement loans, those are sort of the places where you might likely have issues with diversion. Okay, but just like Efosa has pointed out, in disbursing such loans, you look out for the vendors providing services or supplies and disburse directly to such vendors. So a school wants to purchase a school bus. Who is the bus supplier? You pay directly and then they get the bus. So they don't have that chance to divert that fund into something else. And then I'm just going to speak with Efosa. We are in the same city here in Nigeria. So I know your office. Don't be surprised if I come to your office one day and ask for support, because I see you have a lot of experience in this. Those of us who are just coming, all thanks to Opportunity International, we just did a Edu Finance training, and very soon we are going to conclude our products and then roll out. And when we roll out, when we run into traffic, we'll call on Efosa. Efosa, be rest assured that we are coming to your office. Thank you very much.
Thank you, Philip. I hope we are not landing Efosa into trouble, but this is the reason we are having this webinar, to learn from one another. So, ladies and gentlemen on the call, allow me, join me in saying thank you to our very wonderful and very able panelists. Efosa, you've done an amazing job. Maureen, I can't add any extra words onto what you've done today. And Betsy, thank you very much. We couldn't have any other team. You have been such an amazing panel, and we thank you for making time to join us today. Ladies and gentlemen, I still want to say that if your questions come after, we'll be able to respond to them. Time is never our friend, but thank you once again. I would like to hand over to Brian, and then he will let us know what's next. Thank you again, our wonderful panelists, and thank you, our audience. Over to you, Brian.
Thank you so much, Robina. That was amazing session we had. As you already said, we wanna thank the panelists. You already said they have done an amazing job. Our audience was such an interactive, a lot of questions. So I'm going out with so many learnings. So I think I'm very happy. I've learned a lot of things today in this session. So I'm very happy. And we want to thank you all for joining us. We're not taking your time for granted. We are very happy. And this is our culture for organizing and host this kind of global stages to share learnings and also discuss this important topic. So I hope we'll get to see you all in the next sessions that we are going to organize as well. So as we are closing, we have a very, few questions for post-webinar survey. I've posted the link on our chat box, so please take some few minutes just to fill out. So we need to hear your feedback about our session today, and if there's anything goes wrong or right. But also, as also closing, I want to apologize for our Spanish speakers. We got a little bit of trouble for our interpretation there, but I hope we get to fix that. And in the next session, we are going to have the interpretation ready. So yeah, I think that's all the end. Please take some few minutes to fill out the form, and we really appreciate that. Until we see you all in the next session. Thank you so much.
Thank you. Bye-bye.
Thanks, everyone. It was great sharing the table with you guys. Enjoy the rest of your day.
Thank you.
Thank you,
Bye.
Officer.
Bye,
Thank you.
everybody.
Bye-bye.
Thanks,
Bye.
everyone.
All right, thank you guys and have a great evening.